You are a major hospital. All of a sudden you notice all your computers and networks are down. The only thing you can see is a scary message saying all patient data, surgery schedules, and other confidential data will be deleted or possibly even shared to the public if you don't pay millions of dollars of ransom to this Bitcoin account. This is a serious problem going around all over the world. A hospital in Illinois actually closed permanently after it couldn't recover financially from a cyber attack. Even United Health Group, a company worth $500 billion, wasn't able to process payments for millions of civilians after a cyber attack. Imagine not being able to pay for life or death treatments. Investing in the cybersecurity industry can be a promising opportunity for the future and make many investors very rich. While all the attention is on AI these days, one industry that's always going to be around and be in demand is cybersecurity. I'll go over two of the top companies in this industry, but first let's talk about what cybersecurity is and why it's a cash flow king. So around the world, there's increased cyber threats. Companies hold lots of confidential data, and hackers know they can sell this info or hold a company for ransom if they can hack into a company's servers. Next up, we have regulatory requirements. Thankfully, the government also requires strict processes on how companies must protect data and their privacy, which is going to force companies to invest in cybersecurity solutions to comply with these requirements. Don't forget remote work. As more companies have adopted more remote work options, that's increased reliance on digital technologies and online collaboration tools that cyber criminals work to exploit. Let's go over two of the top cybersecurity companies that have made investors quite rich in recent years. We have to showcase the power of Seeking Alpha, which I'm excited to say that I'm now an official partner of Seeking Alpha. For a limited time, you can get a Seeking Alpha premium membership at 20% discounted rate and get a free 7-day trial by clicking my affiliate link below, which also helps out a small-time YouTuber like me. So the first company we have is Palo Alto Networks, known for their first-class firewall solutions and a giant portfolio of different cybersecurity products and services. It's also a company known to continue to innovate and address the ever-evolving cybersecurity challenges. Just look at their revenue growth over the years, going from $1 billion in 2016 to nearly $7 billion this past year. And its trailing 12-month mark of $7.5 billion, that is so impressive. It just highlights how much of a growth machine this company is. Switching to the cash flow statement, look at this, guys. Look at how impressive their free cash flow per share is. They went from $2.24 in 2016 all the way up to 9.42 in the trailing 12 months. An increased free cash flow per share can suggest the company is generating more cash from its operations. That is a great sign of financial strength and stability. One of the great things about companies buying cybersecurity products is that they have to keep doing it over and over again. That's reoccurring revenue that Palo Alto has and is also committed to its long-term goal of achieving $15 billion in annualized recurring revenue, or ARR, by 2030. Palo Alto gets an A+ grade in their profitability sector. Seeking Alpha calculates this based on measuring the company's profitability relative to other stocks in this sector. One area that they nearly fail at is valuation at a D-. This could be because Palo Alto is up an impressive 253% in the past 5 years and over 1,000% in the last 10 years. They now have a lofty PE ratio of 51. But for high quality companies, it's often expected that you have to pay a premium for them. It's going to be hard to stop Palo Alto in the future when they're already forecasting double-digit growth, expanding their total addressable market, and increasing their revenues from their subscription models. One of their big AI plays is the CoreX platform, which will allow tasks to be automated through a self-learning platform that can free up security personnel for more complex tasks. Okay, but probably the biggest reason anyone can be convinced to jump into this stock is because the greatest investor of all time is buying it. And we can confirm that Sister Nancy is indeed jumping into Palo Alto Networks, buying a long in-the-money call option expiring in January 2025 with a strike price of $200. Now, we all know Pelosi is such a great trader. She somehow generated a 65% return in 2023 and has consistently outperformed even the best Wall Street traders. It's almost as if she has like special information that other people would go to jail for if they traded on the same info. The next company we have to talk about is Crowdstrike, a company that specializes in endpoint security, threat intelligence, and incident response services. So endpoint, that refers to security solutions that protect your phones, laptops, and other servers. Threat intelligence, this gathers intelligence on emerging cyber threats by analyzing vast amounts of data collected on its global customer base to protect the organizations proactively. Now, incident response, this is in the event of a cyber attack. Crowdstrike will offer incident response services to investigate, combat, and remediate the incident. Crowdstrike is of course a subscription base, so hello reoccurring revenues each month. They also just launched their Charlotte AI tool, because of course they did. What company in 2024 hasn't launched some sort of AI? But this will help them stop breaches through threat analysis in real time. AI in itself is a threat, so does this mean that AI is now battling other AI? Where's the popcorn? I want to watch this. Crowdstrike is actually a super young company, only being founded in 2011. This past year, they were barely in the green at $89 million, but look how rapidly their revenues are growing, going from just $52 million in 2017 to $3 billion in their last 12 months. That's amazing. It's no surprise Wall Street has woken up to Crowdstrike's potential, as it's up 410% in the last 5 years. It now has a buy rating from 37 out of 38 analysts, and despite its ludicrous 800p ratio, it still has 14% upside potential from analyst ratings. Unlike other companies that want all the publicity, it's probably actually a good thing if you don't hear about cybersecurity companies. That usually means something bad has happened to a company and Crowdstrike or Palo Alto Networks needs to come save the day. But that doesn't mean cybersecurity isn't super important nor super profitable. Remember to leave a like for a small-time YouTuber. Did you know I've beaten the stock market in total returns for quite some time now? Check out the Patreon link below for my weekly trades, chat with other investors in our Discord so we can get on this journey to retire early together, and I'll buy, stash, and collect cash later.
Dissector, you are an idiot.